The rise in US Treasuries on thoughts that the Fed may need to be more restrictive on rates has been nudging the dollar-yen pair higher over August. You can see here on the overlay the US 10-year yields in the green and the dollar-yen in the candlestick chart. And the dollar-yen tracks US 10-year yields very, very closely. So rising yields has resulted in the rise of the dollar-yen pair. Now, on top of these gains, a couple of things to note. First of all, that the dollar yen is moving up into an area where the Bank of Japan will be very concerned about further yen weakness. Anything around the sort of 146 up to 150 is a potential area where the Bank of Japan may intervene and buy the yen, which would weaken the dollar yen pair. And the intervention comes through Japan's Ministry of Finance. So watch out for any potential dollar yen gains. The higher it goes, the more likely intervention from Japan. Now the seasonals here are quite interesting. Over the last 10 years, between the 28th of August and the 31st of October, the dollar yen pair has gained 80% of the time, and last year it gained over 8% as bonds were sold off and yields were rising on changing interest rate forecast expectations. Now, the other thing to note about this narrative is that Nick Timiraos, known as the Fed watcher, is suggesting that if the economy is running above potential at 5.25% interest rates, then that suggests to him that the neutral rate might be higher than we thought. So there is a potential that when the Federal Reserve meet, not that they're meeting officially, but at the Jackson Hole Symposium at the end of this week, sometimes that is a venue for communicating policy tweaks or shifts, and Jerome Powell is due to speak on Friday. That potentially could see some communication from the Fed that maybe if they are expecting rates to remain higher, or they see the need for even higher interest rates, that would be an obvious place to communicate it. So just to be aware, this very strong sort of seasonal pattern in the dollar yen to the upside is very interesting just ahead of that significant meeting. Major trade risks. There are many risks with this outlook. The main risk here is if at the Jackson Hole Symposium there's a more dovish outlook from Jerome Powell. And remember what we said at the start, the higher the dollar yen pair goes, the more likely there is for intervention from the Ministry of Finance in Japan. Remember, don't just trade it, season exit.